Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the medium time frame, where we're first going to look at this bullish scenario where a sideways corrective structure in a WXY is finished and we're looking for price to move towards the upside, where inside wave Y we are then looking for a triangle. So we have a zigzag W, flat in X, and then over here wave A, B, C, D, E, and then eventually from this low you're going to be looking for 1, 2 and continuation to the upside in a bigger wave 3. Now some charts do have a bigger wick to the downside here, which then validates a potential triangle in wave Y, as it is an A, B, C, D, E, but wave C is not allowed to take the low of wave A. So the charts that do have a wick to the downside have a higher wave C compared to the wick, but if you look at my chart over here, if this is the low of your A, B, C, D, E, wave C ended below the low of A, which invalidates a triangle, as that is not allowed. And because also many charts do not have that wick to the downside and then a wave C did end below wave A, this scenario has a low probability for me, just like also the flat scenarios at the moment have a low probability on the medium time frame. Because over here in this regular flat where wave C ended below A, we have a flat in wave B. So you have an ABC flat in wave B inside a bigger flat, which is incredibly rare, lowers the probabilities that this whole structure is a flat. And if you would move this wave A to this low over here, then we talk about a running flat, because the low of C did not take this low over here, and a running flat is also incredibly rare. So therefore on the medium time frame at the moment, from an Elliott Wave perspective, the probabilities are higher. We're still going to see a move to the downside in an ABC zigzag, where potentially the high of wave B is in, tapping the golden pocket, closing right on top of the 0.5, where currently the most common target for wave C between the 1 and the 1.236, taken from the high to the low of A to the high of B, is between 23.5k and 21.8k. And we do have some additional support over there, as you can see, the blue target box that I have between 21.8 and 22.6k. Another thing that increases probabilities for still a move to the downside is the fact that we have a double bottom over here. Very rare to not take a high time frame double bottom, but also over here some charts wicked this low already. Beside the fact that it's very common for a long wick to eventually get filled, it's also very common to see charts aligning by taking the same high or lows on the higher time frame. So the fact that some charts took this low over here increases the probabilities that other charts will follow. If we do think about the bullish scenario where this is the low over here and then we're looking for upside, then the only real scenario you're going to have is going to be an expanding flat over here, because a normal impulsive structure is invalidated because of all the overlap. Contracting diagonal is also already invalidated, wave 3 longer than 1, and a double 1 2 does not look good, as in a double 1 2 you actually want the second wave 1 and the second wave 2 to be shorter in time and price compared to the first wave 1 and 2, which is not the case. So that leaves us with this scenario, but an expanding diagonal scenario is rare in general in Elliott waves, especially on higher time frames, so really take this with a grain of salt. But in this particular scenario, wave 3 is longer than wave 1, wave 5 is longer than wave 3, that's what you want to see, even though wave 3 is quite short for an expanding diagonal wave 3. At least it is longer than wave 1, which is a minimum requirement. Wave 4 over here reaches 786, that's common. Wave 2 bounced on the 05, which is a less common target for a wave 2. But in this scenario, highest probability is that the high of wave 5, and therefore wave 1 is finished, and we're going to be looking for a corrective structure where the most common target for wave 2 is between the blue and the orange line here, between the 0.5 and the 0.786 fib, which is between 27.4k and 26k, for then over here a bounce and then a move towards the upside. Now, if we then also look at the more like bullish structure that we have over here, then the question I sometimes get is, hey, we can fill that wick, which is true. Wicks tend to get filled, something I just mentioned as well. And we also have this big wick to the upside. So there is a probability that we fill this wick. But how are we going to do that, right? I think the probabilities are higher for first to move down and then filling the wick in a bullish expanding diagonal scenario than doing it right away from where we are at the moment. Because if we look at this structure and we want to count this as an impulsive structure, Then over here, the high of a wave 5 should still be in the making. This is your high of a wave 3. And over here, you then have the lows of a wave 4. Now, the problem here is that if this is the high of 3, and over here you have the low of 4, with this candle over here on the lower time frames after this big news event, price moving down, hitting the golden pocket, the 618 taken from the low of 2 to the high of 3, which is an incredibly rare target for a wave 4. You do not like to see this. Usually I say the moment it hits a 618, it's invalidated, as it is so incredibly uncommon. I think I've never seen it really. But of course, this is quite a special wick, special event. So there is some probabilities, I suppose, and also a wave 4 of a higher degree tends to retrace to a potential wave 4 over here of a lower degree. So yeah, we did not yet pass this little range, which is going to be important for the bullish scenario, where you're then going to be looking for a wave 5 to the upside. But even if you try to count bullish structures over here more locally, it is incredibly difficult to be bullish here. So we have over on the chart contracting diagonal, like an ending diagonal, but it's not going to make you take this high. Like wave 5 is not going to get up there, because in this scenario you then have a zigzag in 1, 2, 3 wave in wave 3, zigzag 4, and then you're looking for wave 5. Wave 3 hit the most common target, wave 2 hit a common target, but wave 4 over here hit a rare target, the 786 for a wave 4 in a contracting diagonal, and then you're still looking for a wave 5 to the upside, but the target is never going to take the high up there. Another scenario I had on the chart, previous video, potentially, even though it was lower probability, was a WX and then a triangle over here in wave Y. And then this is going to be your 1, 2, and you wanted to see continuation. But now that price took this low over here, this scenario is also invalidated. So the probabilities over here locally are much higher for the bearish scenarios, which I will show you in a second. Because first, we're going to zoom out again, go to the bearish scenario on the 4-hour time frame, where on this time frame we're looking for this WXY, flat in W, X double zigzag, and then a zigzag in wave Y, most common target for a wave C, and then an ABC has been hit. Very, very nice indeed. And then you want to see continuation to the downside, as I don't really like to see this high being taken for a wave Y. So preferably that's the high, and you're going to move to the downside, where then of course we're going to look for lower prices. Now in this particular scenario, if we then zoom in, the impulsive scenario supports the higher time frame count, right? Because you want to see impulses to the downside in a 1, 2, eventually a bigger 3. Now this wave 1 is extremely short. Like you have to go to the 1 minute to try and count an impulse here. It might be possible, but it's very difficult doing 1 minute counting. Not really something that I like to do also. And then this wave 2 over here is quite long compared to your wave 1, but maybe because it was so impulsive, you know, and wave 1 is so short, wave 2 makes up in time for the very short wave 1. So, you know, there's many things going on here at the same time, but most importantly is that for a wave 2, the common target 0.5 has been hit. Of course, the golden pocket, I just keep it on the chart just in case we are still going to see a reversal, but wave 2 could already be in, and then a 3-wave structure to the upside, where then you're going to be expecting a move towards the downside. Now, just now I mentioned that if we make another high, probabilities are still higher. We're going to see a move down, because then we can have a WX and then a potential flat scenario in a wave Y, reaching the golden pocket before then moving to the downside. So that's still something that I have on my mind, but at the moment it's a bit early to call. So therefore I prefer to just show this and keep it a little bit simple. Yeah, if we then look at the confluences, we just during the recording this morning, price pumped to the upside, hit this naked point of control, this point of control, I should say, of this news event over here. The most volume was traded at this particular level, 28,930, hit very nicely. And I mentioned in that video that now it's all about observing the reaction, observing what is happening over here. And I'd just like to give you an example of what I then look at. So over here, I wrote, could observe the reaction locally. Closing back in the range would not be great. As long as it's above, there's potential to still move to the upside. So here, you then have the channel that I took. Price moved up, moved down, but was still above the channel. Now, of course, eventually, price is moving below the channel. retests the channel. And what is interesting with that particular retest is that at that moment in time, when price was testing the channel high, what you saw were bearish CVD divergences over here on the chart. Lower high on price, higher high on the CVD, and then boom, price moving to the downside, crossing the point of control as well, which it acted for support very shortly. Point of control moving up, bearish CVD testing the upper line of the channel, and price moves down towards the double bottom, which has been crossed, but you can see it's not a swing failure pattern. It didn't wick below and immediately went above. It actually closed below, which is not a great sign as well. Now at the moment, on the 1 hour, you can see we have an order block over here, which is now important resistance for price. And this order block is sitting between 28,480 and 28,580. So that's an important area. But at the moment, it doesn't look too great for price, and the probabilities are high in this whole range, whatever it's still going to do, to eventually take this low over here. If we look at the CVD divergences, this is the CVD divergence I have just shown you, retesting the channel high over here, moving down, up, bearish CVD at the channel high and moving down once more. And also looking at the volume, while price is moving to the downside, you can see a volume spike, which gives higher probabilities that this is part of a potential wave 3 for more downside to come. So we have to wait and see how that is going to develop. So if I then zoom out and I show you the probabilities of the different time frames and the scenarios, then at the moment the probabilities are higher on all the time frames to still look for a move towards the downside. Now of course the local price section will eventually form the higher time frame, so I keep an eye on what's happening locally, but bullish scenarios are very difficult here. Bearish scenarios locally have a much higher probability, but also on the low time frame with the expanding diagonal does not look great compared to a WXY because of probabilities. And on the medium time frame, a WXY with Y being a triangle doesn't really work for me. The flat scenarios don't really look good, and the zigzag currently, based on Elliott Wave rules and probabilities, looks the best. So we're going to continue to observe and update you, of course, 3 times a day. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.